It's 10 a.m. right here in Lagos, Nigeria. Good morning, good evening, wherever the world you're watching from. It's Business Morning live from Channel's headquarters right here in Lagos. I'm sure you're getting ready for the Easter celebration. It's going to be a fairly, long holiday, and I hope you have cash to enjoy the holidays. And I also hope the payment channels work seamlessly so you can take your family out and have fun. But first off, right here, let's take a look at what's in the news. It looks like gravity is starting to act on oil prices. We see Brent there down about 41 cents to $84.58 a barrel. US WTI crude futures, that's dipped about 45 cents, about 0.6% to $80.16 a barrel. Brent and WTI have both gained nearly 6% so far this week, headed towards 3 straight weeks of increases after the Organization of Petroleum Exporting Countries and Allies, including Russia, a group known as OPEC Plus, pledged voluntary production cuts. We'll see if more cuts are going to come later on in 2023. But World Bank sole nominee for President AJ Banga says he supports his predecessor's proposal to expand the bank's annual lending capacity. That's the $5 billion lending expansion plan proposed by departing World Bank President David Malpass aims to help tackle climate change and other global challenges. In his first major address on his plans for the World Bank's future, Mr. Banga states that he has high ambitions for reforming the world's largest development lender, but the effort would take some time. Also, he adds that in order to raise the trillions of dollars needed annually to reach the 2030 and 2050 global emissions reduction goals, the World Bank needs to help catalyze private capital. And the World Trade Organization has raised its forecast for global trade growth this year. However, the WTO still predicts a slowdown and warns of risks from the Ukraine war, with geopolitical tension, food insecurity, inflation, as well as monetary policy tightening. The Geneva-based trade body forecasts merchandise trade volumes to increase by 1.7% in 2023, while goods trade growth is expected to rebound to 3.2% in 2024. The WTO Director General, Dr. Ngozi Okonjo-Iweala, says trade growth has held up despite global tensions and cautions against fragmentation. Take a listen.
If we see investment patterns following the talk we see now, this might indeed have an impact on trade in the future that we think would be detrimental. For instance, we think that fragmenting into 2 blocks, which we've shared before, would result in a 5% global GDP loss in the longer term, and double-digit losses of about 12 to 14% for emerging markets and developing countries, welfare losses in the long term. So this is why we are cautioning against fragmentation. There are significant downside risks from the war continuing, for instance. I think one of the most important things is ending the war would really give a significant boost to global growth, to trade growth. Geopolitical tensions are a definite downside risk. And we see more and more of that tension occurring. Global food insecurity, and also the fallouts from monetary policy tightening and inflation. And of course, we also have the financial instability we've recently seen from the banking sector, although that seems to be tamping down, but it's still a little bit of a source for worry.
With the growing number of loan apps in the country, the federal government, through its Federal Competition and Consumer Protection Commission, that's the FCCPC, have approved 173 digital lending applications to operate in the country. For more now, let's talk to Mr. Babatunde Rikera, CEO of Federal Competition and Consumer Protection Commission. Join us right here in the studio. Great to have you, and I'm happy you could make it regardless of that incredible traffic we have coming this way.
It is quite difficult.
Thank you for going through all that stress. But now let's look at these loan apps. They've been tagged a number of names. Some have called them loan sharks, and we know about how they name and shame and all of that. And now a good number of them are getting approvals. 119 got full approvals, while 54 got conditional authorization. Can you run us through the process?
So what it is that when we intervened starting end of 2021, when we created the joint task force between the FCCPC and the other agencies. We developed a process, and the first intervention was raids in March, and then subsequently in August last year. And what we've discovered is that there were so many apps that you have 173 who have met the limited and interim guideline and framework. It's actually a scale down from the sheer number that we're operating. And so what we've done is to create this limited framework, which is interim, as it says, to at least figure out who these people are. Prior to that, we didn't know who they were. There was really no way to track and trace. And many of them were actually operating outside the country, mostly from China. And all they had were just the apps here. And even the tokens for operating their bank accounts were resident in people's hands outside the country. And so that has stopped. And the 173 that have been registered are people who we know where to find. They have a policy. They have a loan recovery policy, interest calculation policy. And then they have a commitment not to abuse people's privacy by taking information they shouldn't take off the phones. And secondly, by not informing third parties or using abusive language in how they recover their loans. Is this still happening? Yeah, to some extent it is. It's certainly not as bad as it was before, and we'll just continue our enforcement work. But now it's easy to find them. Before we were able to conduct the first strike, it took 3 months even trying to investigate where to find the businesses. But at least that's not the case anymore.
Well, quite incredible operating outside the country and, giving out these loans. And you wonder, it's quite risky, giving loans to people you don't really know, but they still go about it. Then they have to now, go through that whole naming and shaming process if, you don't pay. But, looking at, where we are, right now, is it possible that the ones that have gotten approval, at this point, what's the process of making sure they don't still, go through that whole process?
Well, so what it is that, businesses, whether licensed or not, have a certain set of rules to comply with. And even when they have those rules, sometimes there are violations of the rules. And so that a business has been registered or licensed under the framework doesn't mean that there will be no complaints, or sometimes they won't violate the rules. But at least the rules are clear, and they've subscribed to the rules, and we know exactly how to find them. So if someone says that, look, I got an inappropriate message from X company, we know exactly where X company is. We're able to look out for them. And then for the ones that just send nebulous messages without identifying who they are, we said you cannot even approach without disclosing who you are. And so there's some of the rules that have been put in place so that we can regulate the space better. And I believe we will.
And I know recently I did get some messages for some contacts on my phone, and this new tactic I saw was the person that actually borrowed the money. They said the person had HIV and escaped from the institution where they were holding the person. Then another message follows through, apologizing for that. Is that because of all this processing we're seeing right now?
I don't think that itself is a strategy. I think what must have happened is that it's quite likely that the company where this happened is one of the companies that's before the FCCPC. And perhaps a message had gone out, but realizing what that message was, this was in order to withdraw the message, because it's taking them time to percolate the policy all the way down. Many of them just recruit people in their hundreds just to come and recover these loans, and some of them actually outsource it to agencies that have people who do it. So it's taking time for them to literally get all their people to understand the new landscape and comply. And that's one of the things we've said to them, that we would not give you any amount of time to figure this out, because people on the other side are victims. And so I would say that more than likely that was an error, something had gone out and they needed to recall it. Because if it became a pattern, if what they were doing was first of all send out a defamatory message and try to withdraw it, it wouldn't pass the regulatory muster. If that was reported to us and we'd seen that it was happening the first, the second, and the third time, we would absolutely take action.
And, at the end of the day, both parties are involved, the lender and the debtor at this point. But how are they, protected as these digital lending apps? Because, most people collect these loans with no intention to actually pay back.
And that's a very good question, an important question, because we also have an interest in making sure that their business can succeed. And the reason why we have an interest in making sure their business can succeed is that there are vulnerable people in the society who, that gap, people who cannot, don't have collateral, and the traditional banking institution, lending institutions securitize their loans. And so these non-traditional methods are important for the most vulnerable people. And so we intend for the ethical ones to stay in business. However, the rule to stay in business cannot be to violate the rights of your consumers or customers. And so they have to develop a business model, do their risk assessment and risk analysis, and be able to tell. I mean, you have a credit bureau that allows you to figure out if somebody is a chronic debtor or a responsible borrower. And so they must be able to go through that, not just this easy way of harassing people and getting money out of them. One of the things we saw with the harassment and the defamation is that all it did, it didn't improve the lending situation. What it simply did was to create more victims out of single victims. And so when someone is being harassed, he goes to another one, he borrows money, and so it just became a vicious cycle, which at the end of the day, I mean, the entire industry will still come crashing. It's just that you make your money, you live for the day. And what would really work best is an industry or an ecosystem where each of these lenders is able to develop some information about the potential borrower and know whether there's a responsible borrower or not. The more performing loans in the ecosystem, the stronger and more enduring the ecosystem would be. So if they take advantage of the credit bureau and the credit institutions, where they can report those who have defaulted and they can check the credit of those who are applying, I think that would make some significant progress. And the technology is there. The credit institutions should also step up their technology so that these things can be checked instantaneously, and so that you don't throttle or slow down the speed of commerce.
And definitely, you know, the interest rate is another issue, you know, for most of these, you know, lending apps. This regulation, does it, you know, have to do anything with, you know, how much they actually charge, you know, for interest? Because I've seen cases where if you're taking about 600,000 now, you're having to pay back about 1.something million, you know, over 100%, about 100%. So is there any, you know, regulation on that front?
And I think that ultimately the landing point for this ecosystem would be some regulation of interest rates. But we at the FCCPC don't have the expertise for that. That's something financial regulators like the CBN do. But I'd say this, interest rates are a function of risk. It's a risk assessment thing, and they're using very sophisticated technology to determine who's eligible for these loans or not. So they have to do more work. They have to do more work and look at people before they decide. And one of the reasons why the interest rates are high is because, look, in the event of a default, there's really no way they're not collateralized, there's no security. But you still have to do a lot more work to make the interest rates reasonable. Right now, we have a sense of what we think is absolutely unreasonable, but we're not regulating and capping and saying what we think it should be. But what we consider unreasonable, we ask questions about. What we focus much more about is how you calculate interest, whether you're compounding the interest, whether you're adding default amounts to the principal and calculating interest on that, because there are lending principles that violate globally accepted standards, and so those are the ones we're enforcing right now.
All right, what about loan apps or digital lenders that didn't make the cut? You know, what happens to those ones?
I'm sorry, they didn't make the cut.
And what if they still operate at this time?
They'll be operating illegally. And if they operate illegally, they'll be held accountable. For one thing, I think it will be difficult for them to operate optimally, because the understanding we have with Google is that in the absence of our approval, nobody can get on the Play Store. So for one, they won't be able to get on the Play Store. But yes, they have other Facebook and other sources online to operate. And if we find them, we'll certainly come against them and hold whoever is hosting them accountable to taking them down.
And definitely quite a lot of Nigerians are vulnerable at this time. Any kind of sensitization, you know, to tell them, you know what, you don't have to go for these loans, even though we know you need money, because these loans the interest rates are really high.
Right, and what we say with respect to that is that, yeah, we recognize the vulnerability, but you're actually more vulnerable if you fall into the hands of those who violate the law. And so one of the reasons why we're putting it out and letting people know, and we have it online, you can go to our website to see who's legitimate or not. So borrow from a legitimate digital lender who the regulators know how to find and hold accountable. That way you're likely not to be a victim.
And definitely it's still early days for these digital lenders. Where do you see this industry in, say, 5 years?
I think it would grow. I think they've come to disrupt the traditional lending practices. But I think it's also new on all, and globally everybody is struggling with this. In fact, we're ahead. Kenya, India, some of them are learning from some of the things we've done. So I think 5 years from now, I think things would have settled a little more. Regulators would have gotten a better grip of this, and there'll be a lot more ethical lending.
Because I know definitely a lot of people are interested in these digital lenders, because they do, give out these loans,
especially
really
small.
fast.
I mean, loans that can happen very quickly. I remember that, the scope, the size of commerce is inexorably linked to the speed of commerce, the speed at which transactions can occur. If you think about it, look at what credit cards and debit cards do. It's unsecured lending, right? And so this is just another level that technology is taking us to. And it is the speed of commerce that determines the strength of an economy.
Right. Well, I guess we'll have to anchor it there. And hopefully, the digital lenders actually play by the rules, and the borrowers quite responsible when taking these loans. That's what we're hoping for.
Thank you very much.
All right. Thank you so much, Mr. Babátúndé Ìrùkẹ̀rẹ̀, CEO, Federal Competition and Consumer Protection Commission. Thank you.
Thank you.
Yeah, so we'll take a break now. Still ahead, financial derivatives company forecast inflation for March will slow by 21.85%. We'll drill down on that next. You stay with us. Welcome back for Commodities Market Update. Now we have Bolanle Agbaje join us right here in the studio. Great to have you.
Thanks for having me.
Quite an interesting forecast there for March inflation. We know this inflation issue is still with us. It's 2022 into 2023, and it's still very much with us at this time. But this is a slowdown you are expecting,
but the prices,
the prices are still very high.
Yes, they still remain high, even though we predicted a slowdown from by about 0.06% to 21.85%. It's still very high, ridiculously high, and I think the only reason for the slowdown was because in March we had seen, obviously, the cash crunch started, towards the end of January, or we felt the impact of it towards the end of January, more in February. But what we saw in March was that, many traders, farmers, they mostly try to adjust to the new normal in any sense, because business has to go on. And so we saw some innovative ideas from some of these businessmen. And so what they did was, give discounts for people that would actually pay with cash. So that obviously eased out the tension on prices generally. And also we had seen exchange rate, appreciate significantly. Currently, exchange rate is about 745 naira to the dollar, which is great. And also diesel prices dropped to about 700 naira per liter. So all those factors that we saw in March contributed to the slowdown we had seen in with our forecast in March.
I wonder if it comes out hotter than expected. What next?
Well, we do hope that our prediction is right or very close. And obviously the trajectory is the same, because all in all, it was what was evident in March. Not to say that, it wasn't a drastic drop in inflation, because that wasn't what we saw. But all in all, it's just to look ahead and see what, the MPC will do at the next MPC meeting. And what we also predict is that because it's very close to the handover date, we don't expect any surprises there, because that would obviously spook the market and, give signals that it's not supposed to pass through the market. So we expect that the MPC would most likely maintain status quo, just because of this prediction that we have when it comes to inflation rate.
Because we're not in the US Fed is there's chatter that they might, pause, interest rate hikes there but there's still a possibility they might, go hard again.
Yeah, so if this thing is when determining what exchange rate or what interest rates to, place, what the MPC committee figures out during that month, it's a very tricky thing. You almost have to closely watch the market and hope that you're not getting reversed impact on the market. So it's a day-by-day situation. They more or less see what has happened within the 2 months lag period, and then going forward they figure out what they're going to do. So for the US, they'll most likely watch how OPEC Plus's decision and all of that plays out in the market, the banking situation, the banking industry in the market as well plays out, and then figure out what they will do ahead. But what remains is that inflation is still very high, around the world, and the central bank, their first point of call is to tackle that inflation rate.
So much battle. Looks like the battle is still going to be very hot in 2023.
It's most likely going to be there till the end of the year, because as much as you expect that the interest rates really affect or brings down inflation, it's still a gradual process. And right now, inflation around the world, especially even in emerging market economies, inflation is really high for most economies, and so bringing it down wouldn't be as easy as we expect.
All right, let's look at the oil market now. This start the week, raging with the bulls, pushing after we got that surprise output cut, but now it looks like it's coming back down. Despite the bulls losing steam.
Yeah. So what we must understand is that with oil prices trading at about $70 per barrel, it was because of the shock we had seen in the banking industry. And that obviously is not reflective of the fundamentals in the market, so the supply and demand fundamentals. So right now, with whatever OPEC has done, it has more or less brought the price back to, the reflective price that reflects whatever happens with supply and demand. So right now, what we're seeing is that we had less than expected stockpiles, US stockpiles increase, and obviously that is the supply factor that more or less brought the prices down. And also the weak data from China as well, the manufacturing data is not also great for oil prices. So so obviously it declined it declined marginally, but it's still trading at about the price that OPEC Plus seems comfortable with.
So it looks like the dynamic we're seeing here is that once there's some kind of output cut, story, we'll see the prices jump.
Yes,
then
and then they stabilize.
Economic data issue now, drags the price
down. Not necessarily. So economic data issue that is reflective of the supply and demand factors. So it's not necessarily just economic data signaling. It's economic
that
data
impacts demand.
Yes, demand and supply. That's what usually affects or moves the volatile price of oil.
There's a really drag and pull situation we're seeing in that
But
market.
what we know is, all in all, it's not going to fall. We hope it doesn't fall below $80 per barrel, and that price still keeps its momentum going forward. And also, you have to also give it time. This output cut would obviously feed into the market slowly, and by any chance, when demand picks up, you'll see that drag with supply, or the need to increase supply, and that's not going to be the case.
Talking about the output cut now, we're seeing our own, outputs beginning to, get better, gradually, but the output cut is not affecting us. It's not impacting
it would
us
definitely not affect.
Gotten there yet.
Yes, because we were never there to start with. So all in all, we'll most likely be increasing our production to the level that OPEC Plus actually gave the country. And once we get to that level, any going forward, I don't think would go past that level, because it wouldn't benefit it wouldn't benefit us as consumers of or producers of the
what are you saying for oil prices next week?
So next week, I guess oil prices will probably range between the $83, $84, $85 per barrel, except something significant happens next week. And obviously, we're entering the Easter period, so I think for prices, it will more or less, stabilize during that period. And hopefully next week, after the holidays, we expect that, oil prices move up significantly. But it has to do with, a significant, outcome or news to do with supply and demand.
And talking about, Easter celebrations,
Yes.
Kicks off tomorrow, and obviously we still have that, lingering, cash issue,
Yes.
even though it's easing.
So with the talks of inflation, obviously going forward, in the month of April, we have the Easter celebrations, we have the Eid al-Fitr celebrations coming up, and also we have the fact that the cash situation or the change of the old notes as the legal tender is obviously going to affect the inflation rates going forward, and obviously increase cash circulation by about 25%. So obviously in April we expect that inflation goes back up, but for now we're happy that inflation has would most likely slow down marginally, but going forward we expect that inflation would.
And with festivities, I hope the payment channels actually work this time, because there's going to be some kind of overload.
Well, I think they've improved, and I'm sure most of these bank e-payment channels have obviously looked for ways to adapt to the new demand they're seeing in the market. And I think for most businesses, I think they would say that the e-payment situation is most likely here to stay. It's still very hard for some people to get cash, and so most people are still relying on the e-payment channels, and we do hope that it gets better from here.
Yeah, we do hope it gets better. Looking at wheat prices now, we see that's coming down. That should be good news for us.
It's good news for us because we're net importers of wheat, and obviously, hopefully, if this lasts long enough, it can affect the price of the final product, which is bread, for one. And also, the reason for this is because we're seeing the expectations of increasing supply in the US, both for wheat and corn as well, and that's obviously great news for us. With the issue of cocoa and sugar, cocoa prices have gone down, and that's just because you're seeing increasing supply from Ivory Coast and Ghana as well, and also Nigeria. We're not doing so badly in terms of producing, so that obviously has brought prices down. But when you look at commodity prices in general, there would always be the upturns, the downturns, and it would just be nice for us to benefit when it's favorable for us.
And obviously the holidays are here. Are we going to be able to afford most of these domestic commodities? How's the price looking?
Yes, so I guess for the most part, prices, you have mixed signals with prices, or you have some products that prices are higher, and then you have some commodity prices that are lower as well. But all in all, I'm sure, well, with Nigerians, what we've seen is most people usually they'll most likely reduce the amount that they buy or they consume of particular products, but the demand will obviously still be there.
I know eggs are symbolic, with Easter. I don't know if in these parts, but out there. But
and
we know
out
how
there,
much
there's scarcity of egg around the world.
Eggs are expensive.
Yes, they are.
Really expensive. All right, thank you so much, Bolale Agbaje, Senior Analyst, Financial Derivatives Company.
Thank you for having me.
Thank you. All right, so we'll take a moment now. Welcome back. Let's look at capital importation into Nigeria. Now, according to the National Bureau of Statistics report, the total capital importation in Nigeria stood at $1.06 million in the fourth quarter of 2022. And the report shows that the Q4 figure was lower than the $2.187 million recorded in the fourth quarter of 2021, indicating a decrease of 51.51%. Joining me now is Dr. Mobola Adu, Investment Research Analyst, AfriInvest. Joining me via Zoom. Great to have you on the show. Good morning.
Yeah, good morning.
Yeah, so quite a big drop there, 51.51% year on year for the fourth quarter. What do you think drove this?
Yeah, so basically, the total capital importation numbers that we saw released by MBSI, a combination of three major things, right? We have the foreign direct investments, foreign portfolio investments, and other investments. So these three are the key sources of capital importation into the country. Now, if we look at the numbers, like you rightly mentioned, in total, that's when we combine what we had from Q1 to Q4. Capital importation fell by about 20% down to total of $5.3 billion for the year. Now, this is the third consecutive decline in capital importation that we've seen. And the reasons are not far-fetched, right? So if we look at it from a component perspective, looking at foreign portfolio investments, right? Foreign portfolio investments fell roughly about 28% down to 2.4 billion. We also saw foreign direct investment and other investment sources declining 33% and 8% respectively. Now, looking at it again, when we look at the current macroeconomic climate globally, we've seen interest rates rising in advanced economies. And then if we look at it domestically, right from 2020, when the pandemic came, Nigeria has found it difficult to attract sizable portfolio investments into the country. And that's rightly because of several capital control measures that the government tried to implement to reduce capital repatriation during that period. Now, if we bring that back all together, right, we're looking at in terms of macro figures where interest rates at advanced economies and domestic and here in Nigeria. Then you also look at it in terms of some of the capital control measures. We've all heard about several news saying that companies have found it difficult to repatriate funds and that portfolio investors are basically stuck into the country. So these are signals to investors that bringing your hard-earned currencies into the country as at this time may not be that favorably because if you look at it in terms of exchange rate also, when you want to exit the country, there are difficulties repatriating your funds. And so because of some of these factors, right, investors' sentiments are basically dampened to the Nigerian economy. And that's why we're seeing that for the third straight year, capital importation has basically declined.
Yeah, quite a big drop, 2 billion to about 1 billion. But can we call it a trend yet?
Yes, we basically can. So if we look at it, like I said, so 2021, we saw capital inflows declining about 50%. So what we've seen is that for 3 years consecutively, we've seen capital inflows into the country declining. Even on a quarterly basis, we're also seeing capital inflows declining. So basically, we can say that it's a trend we're seeing. And if you look at the whole state of the global economy, the domestic economy, we've talked about some of the capital control measures that CBN has implemented all the way from 2016. So these are some of the factors that are basically reinforcing this trend that we are seeing in terms of capital importations into the country.
What would you recommend, economic managers begin to put in place to restore, confidence of portfolio investors?
Yes, thank you for that question, Nadi. So if we look at it from a foreign investor's perspective, when you're bringing your funds into a country, I mean, there are two major risk factors that you need to consider, or they basically consider. The first is in terms of the exchange rate. So you're coming into a country at a particular exchange rate. You also have to think about when you want to exit, what is the price you are going to use to get your money out of the country. And so that speaks to the multiplicity of our foreign exchange windows, right? So we are having situations of different exchange rates being quoted. So as an investor, you have to be worried in terms of, what rate are they going to use to come out of this market when your investment horizon is due? And then the second thing that you need to look at is also that when it's time to leave this market, how able are you to get your money out as at when you want it out of the country, right? So that also then speaks into the capital control measures that we've been talking about. So we have situations where there are uncertainties about the exchange rates. And then in the official window, the case we are seeing of large funds being trapped into the country is basically because as at when you want to exit the country, how long is it going to take? You're seeing cases where people's funds are being trapped for months. So because of that, the economic manager, basically the CBN, they have to look into ways in which they can ease some of these concerns for foreign investors. And until that happens, this trend is likely to persist.
And, given the shocks, we've seen in 2022, down to the first quarter of 2023, what are you expecting for capital importation in 2023?
Yeah, so thank you. So I'm going back, just piggybacking on what I said earlier. If we look at what happened within the first quarter of the year, I mean, we had political uncertainty in terms of the coming of board of a new administration. So because of factors like that, you would expect that at least for Q1, the numbers were likely to be subdued. So as you rightly mentioned, in Q4 2022, total capital inflows were just roughly around 1.06 billion. So we expect to see a similar trend for at least Q1, even possibly lower. But moving into the rest of the year, we're expecting to slightly pick up. But on a general perspective, when we put in together what we expect to see for the entire year, basically we think that capital importation numbers could close slightly lower than the total 5.3 billion that we recorded for 2022.
All right. Definitely, this will definitely have an impact on the equities market. What are you expecting?
Yeah, that's a good question. And rightly, we've observed that at least for January and February, we're looking at total market transactions in terms of the size of transactions for foreign investors. In January, we saw foreign investors' share of transactions accounting for roughly just 13%. In February, that dropped to 10%. So on one angle, you can see that in terms of capital inflows coming to the equity market from foreign investors, their share has been basically on a decline. So we're seeing foreign investors just accounting for 10% of market transactions. If we look back to 2019 or far back, foreign investors used to hold close to 40, 50% of the market. But that's not what we are seeing. And then also, if you look into the kind of transactions that we're not what we are seeing is mostly it's exiting the equity market. So in January, net outflows into the market was roughly 5 billion naira. And then in February, it's more than doubled to 12 billion. So we are seeing sizable reversals from the equity market for foreign investors. And just like we mentioned earlier, the reasons for their hesitancy to come into the equity market or into Nigeria in general is because of some of the lingering issues that they've been facing in the FX market. We've talked about the issues around exchange rates. But in general, we believe that because now the market is largely controlled by domestic investors, so domestic investors' share of the market is close to 90% now. So because of that, the equity market could still be resilient, and we expect the market to at least close positively. I mean, Q1, the market closed up by about 5.8%. We still think there are reasons for the market to still close slightly bullish this year when we compare to last year.
All right, we'll definitely be watching out for that. But what do you think are the low-hanging fruits? You think the incoming administration could tap into to optimize, FX inflows from like non-volatile sources such as non-oil exports and remittances?
Yes, these are discussions that have been held severally. One key point to look at is remittances, right? So remittances currently are around $20 billion. I mean, that's a lot of money for coming into the economy. But then again, for the new administration, we have to think about how you can direct these funds to flow into the official channels. So what I mean, right, that the CBN they've tried to incentivize people who are workers abroad to bring in their money through official channels, through the Naira for the dollar policy that was introduced last year. So, but the issue with this is that because of the wide gap between the official and parallel market rates, the rebate on such a policy is basically non-negligible in a way, because you're seeing that official markets having rates of 460 to $1, whereas in the parallel markets you are seeing close to 700. So because of that, people will still be more willing to pass these funds through unofficial sources. So for the new administration, they have to look at ways in which they can bridge the gap between the official and parallel market rates, make the exchange rates more reflective of market conditions and expectations. And with that, we should see more inflows or more FX inflows into Nigeria for the new administration.
Yeah, so much work for the new administration to do. I hope they hit the ground, running when they're sworn in. Thank you so much, Dr. Omobola Adu, Investment Research Analyst, AfriInvest. Thank you.
Thank you for having me.
All right, so talking about foreign portfolio investments, let's see what's happening with the local bourse. Talking about the NGX now. We saw that big drop yesterday, and definitely, and he has the details for us. We see it was a big one, big drop there by Airtel Africa to drag the market down. And I know, 1.88%, almost 2%.
Almost 2%.
Red. And the company's color is actually red too.
For the third time this week, in fact, for the whole of this week, we've seen this red color. But interesting that Dr. Adu there is optimistic that this year will end bullish. Well, we look forward to that. I guess it's still early. Because
we see more local investors in the market at this time. So I guess...
I mean, that has been the case since last year. We saw a lot of flights from foreign investors, especially in the equities, and some analysts have even found comfort in that they are portfolio investors. So, I mean, we have ourselves, let's treat ourselves well, but we all know that...
But we do like our foreign investors. Let's make it,
we need the foreign currency.
Yes, let's make it comfortable for them.
Look at the capital importation there, more than 50%.
Big drop.
2021 fourth quarter to 2022 fourth quarter, more than 50%. I think it's something that needs urgent attention, especially as we noted, the new administration is coming in a couple of months.
So much work to do.
They have their job cut out for them. Well, we see there that Airtel yesterday was down about 10%. No wonder the market ended in their color, 1.88% down. Market cap has now lost to 29 trillion naira. So we'll be hanging on that 29 for some weeks now, but we've lost that now. Back to 28. Let's look at the activity. There you have it, all in red, yesterday, 197.33 million for volume, value 2.67, and deals that could give us a little bit of green was also in red, 3,506. Let's see the next slide there. The sector, so this is where we have the details of it. UBA was the most traded stock by volume yesterday, so it was up almost 0.5%. Unfortunately, it cannot stand the power of Airtel. So Airtel was down. Consumer goods was also red. Industrial goods came up a bit, 0.04%. Oil and gas has sustained its green color for a couple of days now. Hopefully it will stay. And we do know that yesterday was market breadth had 8 negative and 14 gainer, 14 lost and 11 gained. Airtel, of course, leading all of that. Ikeja was also part of those trades that were down yesterday. And those were Airtel and Ikeja Hotel. They were the biggest losers of the day. While WAPIC and Mutual Benefit, that's why we saw the insurance there was in the positive when we look at the counters. Now, the top trades, as I've said, UBA 64.20 million, while Transcore 32.02 million, Zenith Bank. So that's why we saw that green color for the banking counter, Zenith Bank. And, the figures, some of the figures, just 2 of them. Transcore has been catching the attention of investors for some days now. We see all through this week so far, we've seen them as part of the top trades, either for profit taking or for bargain hunting. They find their way around top trades. I wonder what's attracting investors to that. But let's look at other markets now. For the federal government bonds, we do see that the overnight lending rate expanded by 25 basis points to 19%. Obviously, still looking for where major funding will come from or get into the system. And so we see for the federal government bonds there that it closed on a bullish note. Average yield contracted by 2 basis points to 13.4% across the benchmark. An average yield decline at the short end of the market. That's for the federal government bond. So at the end of the day, there were 29 deals worth 20.34 billion naira. And very interesting yesterday that the April 2049 Security had 23 deals, a major mover of the market yesterday. And it would be nice to get into the mind of investors and find out what they look out for. Sometimes you see the long securities come up there, then other times you see the short there. Well, let's look at the treasury bills. There are only 3 and worth 3.25 billion naira. And we saw that 2 of those were March 2024, February 2024 had only 1. Let's look at the central bank bills. There had 11 deals, for an improvement compared to other days, with April 2023 leading, and then the value at 41.83. Let's go back to the equities now. We have Chinazom Izora from Parthian Securities joining us to tell us what's going on in the market. Hi, Chinazom. Good morning. So it's been 3 consecutive bearish trade in the market today. Is this a constant? Does it look like it's going to last all through the week?
Good morning. So it's actually interesting. We have had 3 days that the market has closed negative, but the market has actually opened on a positive note this morning. We're already seeing gains in UBA. We're seeing gains in stocks like Owando as well. So it's not constant. I think it's really investors taking profit. Which is to be expected.
Yeah, obviously, because investors are in the market to make money. So you said UBA is already looking good. We saw that it was one of the top trades yesterday. Is it for profit taking or bargain hunting?
So one thing we've observed is that the offshore index is actually at an all-time high right now. It peaked in March. So of course, we will see profit taking. Investors that bought cheap are going to exit now that the prices are high, particularly for UBA. We've also seen their results, and I guess investors are rewarding the company for what they clearly see as good results.
So do you think the market will close positive today for a change this week?
Well, it's too early to tell. It's just 10 o'clock. A lot of the movement that happens in the market, we actually see around 11 to 1. So we'll have to wait and see how the rest of the day pans out, actually.
All right. Thank you so much, Chinazom Izora, a Parthian Securities trader. Thank you for your time this morning.
Thank you.
So, Ladi, I hope you can breathe a little bit of green to the market.
Maybe I could report a green market today, hopefully.
I hope so. That'd be good for your face, because you'll be reporting a red market all through the week.
It's been red all through the week.
You should wear a red jacket.
I should, right?
Yes.
Yeah. Hope I look good in it. Thank you so much.
Thank you.
I was in there giving us the details for the equities market. But let's move on to other markets that are still looking good. You know, at this point, it's still greed. Investors focus on making profit in this market. There are 63 points as for the sentiment in the crypto space. Let's look at the cryptocurrencies there. We see Bitcoin, $28,077, down 1.69%. We're seeing a pullback. Investors expecting that 30K to break anytime soon, but all indications, looking at all indicators, are showing that this is on an uptrend. The market is in an uptrend at this point. So there are expectations that $2,000 is going to break for Ethereum, even trading at 1,894 at this point, 0.87% pullback. We're seeing there Cardano 39 cents down 1.21%. We see BNB holding up a marginal gain of 0.01%. Let's bring in Rume Ofi now, financial market analyst. Hello, Rume. Good morning.
Good morning, Larry. Good morning.
Fantastic. It's working this time, unlike yesterday. So honestly, yeah. So a lot has happened, you know, between yesterday and today. Now it's a chatter about Bitcoin white paper hitting inside the Mac OS. Why is that? Who hid it in there?
That is the question being asked by everybody. Who did that? You know, but it's in a way, it's in a way good. In some sort that knowledge is being transferred, but all of these things are supposed to be done in a particular way. So it's weird, if you ask me. PDF was found in the original. That is the original PDF white paper for Satoshi Nakamoto in the virtual scanner app package for Mac OS is what is still being find out that who is doing this, and this has been happening for a while now. I think Mac OS produced or shipped since 2017, and this has been happening. So it's something we will still find out, but in a way, it's something that needs people to be able to read through and see what this technology is all about. But I don't think it is a good thing not to know who actually did that. So I don't want to believe that Satoshi Nakamoto actually did this before he left. Yeah, but it is what it is.
But definitely doesn't mean that, you know, Apple is Satoshi. Doesn't mean that. Obviously,
there could be some traces, but if you ask me, I'll say Satoshi is Africa, but it's a discussion for another day, maybe in another
definitely another day. And yes, we're going to talk about that peer-to-peer, the peer-to-peer platform, you know, Paxful, about 1.5 million users in Nigeria. They've announced that they're shutting down operations. Seems like a big blow to the industry.
Exactly. So Rail, Yusuf, it's an American, African American, right? Has been running this for a while now. Founded in 2015 as a North Carolina-based platform, Paxful. A lot of Nigerians. In fact, the first time I heard about Bitcoin and how it could be done, the peer-to-peer transactions could really happen successfully was through Paxful. A lot of Nigerians are heavy on Paxful. I think they actually own a hub in Abuja also. Not really exact now because I haven't been there before. They actually are shutting down, citing the very popular challenges that exchanges are having these days, regulatory challenges, but this time it added staff departure, so a lot of their staffs are going down. But one thing Ray has actually done that makes a lot of sense, and I believe that tech founders should also learn from when you're having challenges, you don't have to pull it down to yourself before there's a bust. So he came out also on Twitter to tell people that, see, this is what we're going through, and we'll make sure that all of you have your funds. In fact, the rush for people to have their funds now is even making the process to be slower because everyone is trying to get their phone at the same time. This is the beauty of this technology, right? People can be able to access their funds. And I also like the fact that Ray Yusuf, he's been very sincere. And at some point, he has called himself a Nigerian. He loves Nigerians a lot. And he has said that Nigerians are very smart people. At some point, there's this Bitcoin conference that was held. I think the last one, he said that Nigerians are not scammers. Nigerians are not bad people, as it's popularly said over in some climes. But he has also came out to say, okay, these people are being influenced by certain rings in different parts of the world, you know, but they are smart people. And I like the fact that he's coming out to say, okay, I will make sure that everybody has to get their Bitcoin. Everybody need to get their digital asset before he can sleep. In fact, he was showing us how he's been selfless and he's been doing all of these things to make sure this is possible. They also advised that they can also move their asset to a Bitcoin payment company called BitNob, as a peer-to-peer marketplace, which it's been in existence. I think it's owned by Nigeria, probably. Yes, it's owned by Nigeria, yeah. And it's in other words saying that your funds can be safe and do the things rightly.
All right, I guess as they say in crypto parlance here, funds are SAFU, right?
Exactly,
right.
Exactly.
Thank you so much, Romeo, financial
Ladi.
market analyst. Thank you. All right, let's move quickly now to the gainers counter. Clayton topping the counter up 17.42% there, holding up. It was had that gain last night, and it's continuing that process. And Solar Blockchain, that's up 9.50% of 74 cents. So the market is still looking for direction at this point, but not looking bad. Still an uptrend. That's what all the analysts are saying at this time. All right, that's it on the show today. Thank you so much for watching. Don't forget to join us at 1:30 for Business Incorporated for more updates and developments in the world of business. Thank you for watching and enjoy the holidays. Bye for now.